A new week, new chances for us to make you multimillionaires beyond your wildest dreams. Or something close, as long as it happens to me first. Time for the Money Master, the director of financial newsletters at Newsmax.com. Jeff Yastine joins us to go ahead and check in on Wall Street. I have not yet seen the numbers. However, what happened last week, I'm almost fearful to see exactly where Wall Street is today at this point, Jeff.
Ed, you may have to wait at least one more day before becoming that multi-millionaire. But
Shucks.
the Dow has been, the Dow has been was down about 120 points early in the session. It's flirting with break-even levels now. The S&P 500 up about 2-3 points, and the Nasdaq, S&P up 12 points, Nasdaq up around 40 points. So a bit of a rebound going on for today, anyway.
All right, well, we'll wait and see by the time Friday comes around if we're back to the waffling side of things the way it was last week. Let's go ahead and start out here. IBM is not going to hit their 2015 operating earnings target. They're blaming weak client spending. Always blame it on somebody else, right, Jeff?
Yeah, in the old days, we'd say there was a slowdown going on in China, but you can't use that anymore because it's routine news now. But yeah, for IBM, the problem basically is the hardware side of the business is doing poorly. The software side is doing better. Like, they had some bright points, revenue from their mobile business and revenue from their cloud services, storing things from the internet in remote servers, that sort of deal. Those are both doing quite well. But the other parts of the business, such as its servers, and also it has a chip-making operation that's not doing very well at all. In fact, they're going to pay another company called Global Foundries $1.5 billion to essentially take those chip-making facilities off their hands. So it shows you that they have some, IBM has some hard work ahead of it to divest more of its slow growing businesses.
All right, let's talk about some more technology here. Apple Pay actually launches today. This is where you basically, now you can pay then with your phone. It basically just takes the information off your phone, but this is not really popular yet, correct? I mean, this is still just the beginning stages.
Yes, this is just something that's being launched now with the advent of the iPhone 6. Apple's earnings are due out after the close today, in fact, and that's something that the market is really looking forward to. And for that, they'll be looking at whether there's going to be a bigger stock buyback, if they're going to increase the dividend, which some think are going to happen because Carl Icahn, the financier, has been agitating for that. And they'll be looking at how many iPhones, the new iPhones that they've sold. The low end is 33 million. The high end could be 36 or 39 million. And which end it comes out to will, in some ways, determine what happens to the stock today after the close and tomorrow morning.
It's not really new, is it? I mean, you can now still, with a smartphone or an Apple, you can go into any place and you can basically pay on your phone right here. So do we know what the differences are here and why this is considered to be so revolutionary?
The whole thing about Apple Pay, and really for what a lot of financial services has been aiming at, is to reduce the number of steps to get that payment process going, as well as to make sure the security component is good too. And for years, companies have tried doing it. PayPal has been out there for a long time with various payment mechanisms, but that to make it have less friction and have to reduce the amount of fees you have to pay to move your money through the banking system is also parts of that analysts are looking to see whether or not Apple Pay delivers on the promise that it seems to show as one effort towards that.
About a minute or so left here. Investor Group is planning to buy Reebok for $2.2 billion, and then Adidas, which bought part of Reebok, or actually bought them in 2005. Now their shares are up. Reebok's not nearly as popular as it once was. It sounds almost like a gamble.
Yeah, it's one of those things where Adidas and Reebok, where I think were much more popular in 20, 30 years ago in many cases. Nike has taken them all and eaten their lunch essentially, and they've lost a lot of market share in a key market like North America to Nike. In this case, though, they think that by buying Adidas and perhaps spinning off Reebok may help realize more value. Right now, the company's got a value, Adidas does, of around $14 billion market share. But they think that by doing these spin-offs and other financial engineering, that it could make the company worth more, basically as the as the parts individually as opposed to the sum of its parts.
All right, I want to remind everybody that if you want to find out what the latest that Jeff Yastine and the whole crew at Newsmax has got, financially speaking, go to Money News on Newsmax.com. Check out Money right there. That's where you'll go. There's the headlines right now. Also, be sure to see Jeff's latest report on a covert plan to unleash financial havoc by visiting FIRcollapse.com. Jeff, a pleasure, my friend. Have a great day. We'll see you on Tuesday.
Thanks, Ed.
All right, tomorrow here on MidPoint, our series on the legalization of marijuana continues. After the break, the companies that are trying to make you a buck and make themselves a buck on a cure for Ebola.